Let's break down Avax's current situation in simple terms. The price has taken a big drop, which looks bad at first glance. But hidden within this drop is a classic pattern that often signals a reversal and a big bounce is coming. It's like the market is taking a deep breath before its next move. The chart paints a picture of a strongly bearish short-term trend with momentum firmly to the downside. While there are hints of being oversold, there are no clear signs of a reversal yet. Any upward move at this stage is more likely a temporary bounce or consolidation within a larger downtrend rather than a trend change. Detailed technical indicator analysis. Price action and moving averages. The last price is $20.28, down significantly, minus 10%, on the session. This is a major sell-off. The price is trading well below all key exponential moving averages, EMAs. EMA 21, $23.97. EMA 50, $25.13. This configuration, price EMA 21, EMA 50, is a classic sign of a bearish trend. The EMAs will now act as resistance levels on any rally. 2. Momentum RSI. RSI 14 is at 41.57. This is in neutral territory but leaning bearish. It suggests the selling momentum is strong but hasn't reached an oversold extreme, typically below 30, that might trigger a significant bounce. There's still room for the price to fall further before being considered deeply oversold. 3. Trend and momentum MACD. The MACD is deeply negative at minus 0.5945 and is trading below its signal line. The histogram is positive, plus 0.2097, which indicates that the rate of decline may be slowing, but the overall signal is still bearish. This is often seen during a pause or a small bounce in a strong downtrend, not a reversal. 4. Volume and buying/selling pressure OBV and volume. On balance volume OBV is at 2.008B. Without the historical context, it's hard to interpret, but when price falls sharply, a stable or rising OBV can be a divergence, a potential bullish sign. However, in a strong downtrend like this, it often just confirms the selling pressure. The high volume, 64.716 M, on a down day is a sign of capitulation. A lot of traders are selling in panic. This can sometimes exhaust the selling pressure and lead to a bounce. 5. Volatility ATR. Average true range, ATR, is 3.707. This is a very high volatility reading. It means that daily swings of over $3.70 are now normal. This indicates high fear and uncertainty in the market and suggests that any moves can be sharp and unpredictable. Key levels, inferred from the chart. Resistance. The first major resistance will be the EMA 21 around $24. Above that, the EMA 50 around $25.13 is the next key hurdle. A break above this would be the first technical sign that the bearish trend is weakening. Support. The chart shows a low of $20. This is a critical psychological and support level. A decisive break and close below $20 could trigger another wave of selling. What to watch for/potential scenarios. Bearish scenario. Most likely the price continues its downtrend, consolidates below $21, and eventually breaks the $20 support, targeting lower levels, $18 to $19. Consolidation/relief bounce scenario. The selling exhausts itself near $20. The price enters a period of choppy consolidation between $20 and $24, the EMA 21, as it works off the oversold conditions. A bounce back towards $24 is possible, but it would likely be sold into. Reversal scenario, least likely now for a reversal to be considered. The price would need to reclaim and hold above the EMA 21 and then the EMA 50 with strong volume. There is no evidence of this yet. Conclusion. This is not a chart that suggests a buying opportunity for most traders. The trend is decisively down, and the momentum is bearish. The high volatility, ATR, makes it risky. For holders, hodlers, this is a period of significant drawdown. The decision to hold, average down, or cut losses depends on your long-term conviction and risk tolerance. For traders, the path of least resistance is still down. Looking for short positions on any bounce towards the EMAs, $24 to $25, would align with the current trend. Long positions are highly speculative and would be counter-trend bets. While the recent sharp decline to the $20 support level appears bearish on the surface, it could paradoxically be forming the foundation for a significant bullish reversal. This price action is aligning with a classic bullish descending triangle pattern, which typically forms within a larger uptrend. The scenario suggests that the drop to $20 represents a final shakeout of weak hands, establishing a formidable floor of support. If this level holds firm and Avax begins to coil between this $20 base and a series of descending lower highs, it would signal that the asset is consolidating and building energy. A subsequent decisive breakout above the triangle's descending trendline, accompanied by a surge in volume, would confirm the pattern and trigger a powerful new impulsive wave upward, potentially propelling Avax back towards and beyond its previous highs as the broader uptrend resumes. Avax order book dynamics. The current order book landscape for Avax presents a compelling, albeit nuanced, battleground between bullish intent and significant overhead resistance. While the price has declined to $18.70, the underlying liquidity flow tells a story of underlying buyer dominance, with active buys constituting a strong 2/3 of the market's aggressive orders. This bullish aggression is further validated by the presence of a formidable bid wall at $18.56, which acts as a nearby defensive line. However, the path upward is immediately challenged by an even larger ask wall at $18.90, creating a tight consolidation zone where a breakout attempt will be decisively tested. The predictive model reflects this tension, signaling a bullish bias but with low confidence, suggesting the market is at an inflection point. Technically, the most significant finding is the vast distance to any meaningful historical resistance on the weekly chart, indicating that once the immediate cap at $18.90 is cleared, the runway for a potential rally is extensive, with the next major ceilings not appearing until the $59 to $65 range. The low volume ratio and volatility suggest a period of accumulation or indecision, meaning a decisive break above the local ask wall could trigger a more powerful move as new momentum enters the market. So what's the bottom line? Right now, it's a battle between buyers and sellers at a key price around $18.50. If buyers can push the price up and hold it there, it could be the green light for a significant recovery. Think of it as a spring coiling. If it releases upward, we could see a strong jump. Don't forget to like and subscribe and press the bell icon for more updates.